Yeah, and I'm going to throw another question in terms of servicing. So obviously, it's a strong point with clients. What is one key factor that will obviously soften the servicing in terms of the client's borrowing capacity, in terms of obviously credit cards and spending and so forth? What's one thing that they can steer clear of to ensure that their servicing, you know, it meets your criteria?
Yeah. So with servicing, to improve serviceability, have a look at your after-pay balances. Do you still need it? If you don't need it and you haven't been using it for a while, have that closed down,
Yeah,
because while that's still active and you're not using it, we still need to account for that limit. And the
yeah,
same goes to credit cards. Sometimes we open up credit cards not knowing or not actually utilizing the facility because we did it on a promotion but never ended up using that credit card. If it's
mhm,
not needed, then close that.
yeah.
That will help to improve.
Afterpays.
Afterpay is typically, yes, yes. And it's often neglected by clients because they go, oh, I didn't actually know I had an afterpay facility open.
Yeah, even Latitude, which is one of the ones that we see a lot as brokers, they use it, and then a few years later, they not realize that it's still open. So that's something
Yeah.
that does need to be closed down. They may have used it a few years back, and then it still comes up on their credit file or credit report showing that it's still active. So that's something that,
That's it.
yeah, should be looked at as well. So thinking from a client's perspective in terms of loan application process, so us as brokers will do our due diligence, have all the documents ready to present to yourselves as lenders. What is a easy and mainstream way that we can present those documents and have everything ready? So if there's any finance clause or settlement dates that are time poor, that you can assist us with.
So the more complete an application form is filled in, the more easier the assessment process is going to be. And also follow the 5 C's of credit assessment and really work with your credit assessors when they come back with reasonable inquiries regarding that application. So what are the 5 C's of the credit assessment? It comprises character, capacity, capital, collateral, and conditions. So really understand who your client is, that which helps the analyst as well when they're doing their assessment. We need to know, who are they? What do they do for a living? How long have they been employed for at the current role? Is that income ongoing? And that falls on their income side. Do you foresee any changes in the foreseeable future that may impact their ability to make repayments? Understand their financial situation, like what are their current debts out there? Do they need debt consolidation? Are they using like all of the credit facilities that they may have, and either that be an afterpay debt that we spoke about early on, credit card? Are they utilizing all of the facilities? Do they need them? If not, feel free to cancel them to improve their borrowing capacity. Also, capital. What is client's contribution towards the transaction? We need to know where the funds is coming from. Is it via a gift, a non-refundable gift from parents or family, or either it be savings from clients? We need to ensure that clients will have that money available, set aside, ready for settlements, whilst we don't need to see the genuine saving history. Collateral, this is very important for us to understand what the security is. What is it being used for? What is the highest and best use? Sometimes you may come across a residential property that clients looking at demolishing and rebuild. That's when the highest best use will come into play, and we will need to find a product that is more suitable for this type of security. What is client's intention post settlement? Are they looking at lending it out or leasing it out as investment property? Are they looking at, like I mentioned earlier, are they looking at knocking down, rebuild, land subdivision? Are they using that or converting that into a commercial purpose property? So we really need to understand what the client's intention is with the collateral too. And conditions, last C is the conditions, which includes the interest rates, the loan term, the repayment term, and the proposed loan amount. Does the lending facility suit clients' borrowing objectives? And does it meet their specific borrowing purpose? So we're more likely to approve a loan if we know what we're working with from get-go.
From get-go, yeah, exactly. And touching on the servicing part as well, in your feedback from now and previously as well, credit cards play a major part in the servicing factor. So, clients have $10,000 or $20,000 as a credit limit. In terms of servicing wise, that plays a big factor because you can possibly, afford, or max borrowing can be $500,000 for argument's sake. Without the $20,000 credit card limit, your max borrowing can go up to $640,000 for argument's sake. It plays a big part. So that's why sometimes we do speak to the clients and advise them that if you've got your credit card based at this limit, this is your borrowing power. If you cancel it or reduce your credit card, you may be able to borrow an extra 60, 70, 100 grand. It's case by case, but it does play a major part as well.
Absolutely, yes. And you will see that common or often with the ad going on, 24 months interest free. That means you're actually getting yourself into a credit card facility. You would use that, pay off whatever goods that was purchased, not knowing that after paying off that 24 months, you would still have that credit facility open, which is not used. Exactly. So credit card limit accounted for 3.8%. If you got a $10,000 credit card limit, we actually account $380 into their servicing.
Yeah, exactly.
As existing debt, yes.
So